Good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in these videos we are looking at the market to see what happened yesterday in the market, what is going on, and what we have to expect from today's financial market. As yesterday I mentioned, everything right now is about the virus, is about the new variant of the coronavirus, which I used to forget the name. Omicron, yeah. I don't know, I can't still remember this, so new at the moment, so I can't remember the name. Omicron. Uh, Everything as yesterday I mentioned was about the Omicron and Mr. Paul's testimony in the Senate. Just these two factors they were the most important factor that they change the market. As you see here, again, the market risk in the US VIX is about 26. It's the highest level since the market risk is as it's in its highest level since May 2021. But since May, it's like 6 months. The highest level of it in 6 months. So the market's risk is so high, and that was the reason that we saw some weakness in the stock market. As you can see in this chart, this is the SPF 500 chart. However, it was not the only reason. The another reason was now just finding the first infected of Omicron in US. So Omicron was already in other countries, in more than 10 countries, and yesterday, finally, there was the first case of Omicron, infected to Omicron in the United States, and now the risk is a little bit higher. That was the reason to see these candles here. Besides that, Mr. Powell, again, in his second day, again, for one more time, he pointed out that the Fed is ready, probably, and will discuss in a December meeting to increase the tapering level because of the inflation. The inflation is so high, and at the other side, the market also is improving. The labor market also is improving normally. Yesterday we had ADP numbers. ADP numbers say it shows that a little bit more than 500. Just let me see the exact number. It was a little bit better than expectations. So this little bit better than expectation was enough to understand that market is improving, and the labor market is improving, and it is good enough to see a little bit tightening policies over there. While the market was waiting for 525k new jobs created in November, we saw 534k. It was a little bit better than expectations, but still it was better than expectations. Yeah, it was a little bit less than a month ago, but it doesn't mean that which it means that the labor market already earned their jobs, so we cannot create more and more and more jobs. Just we can create better than expected. So it was totally better. We can say it positive data. In ISM manufacturing purchasing manager index also was better than expected at 61, which it means that the production and manufacturing sector also is improving well. while while yesterday, as mentioned yesterday morning, also we had too many of the PMI data from all across the world, from European, from China, from Europe, and from Japanese data. All they had a mixed number. These mixed numbers in some countries, they were better than expected, they were less than expected. However, it was not what was moving the market. And main market mover, as I mentioned, it was the Omicron, the news from the Omicron, updates from Omicron, and Mr. Paul's speeches. But besides that, early today in the Asian market, we saw there's some Nikkei was a little bit. Let me say about this, and then I will go to our other symbols. Today, earlier today in Asia, we had a mixed market because the Nikkei 225, generally the Japanese market, they followed the Wall Street weakness, and so far they are losing 0.3%. But in Hong Kong and Shanghai, we can see some gain from yesterday lose to regain some of the last day's lose. The main reason was the the construction section and developers. As we know, the Chinese developer, they started to sell the bills in Chinese yuan sort of somehow to carry some money to pay back their debts. So this is what happened yesterday, and it was kind of welcomed from the market and helped the market attitude to keep gain a little bit. But however, increasing risk, increasing risk, while couldn't help that much to the gold, because as you see here, well, let's go first to US dollar index. The US dollar index is in the middle of the yesterday gain, the day before of that, the gain of the Tuesday gain. But however, it's above 96, which it means that the US dollar index is still so powerful. The main reason of that the US dollar index couldn't increase too much, it was because of Japanese yen. Japanese yen, as you know, it is one of the most traditional safe havens. So increasing the risk helped the Japanese yen to increase, and it was against US dollar to put the US dollar a bit under edge. And European currency also was not that much powerful, as you know, as I mentioned, the mixed data, the PMI data was mixed data, so it couldn't help the euro to gain something, but at the same time, US dollar was stronger, so euro USD was in a side moment. In the oil market, in the energy market, crude oil lost again. It was a bit more weak because of Omicron variant of the virus. So the Omicron variant changed the things, changed the market. Still, the market's worried about that, and the weakness in the U.S. stock also puts more pressure on that. At the same time, yesterday we had EIA data, which shows that U.S. inventory levels for crude oil for the week of November 27, if I don't mistake, last week increased more than expected. Let me see the numbers. Today OPEC meeting. Yesterday and today OPEC meeting will be the OPEC meeting that we have. It will be in the spotlight. We are waiting for the OPEC meeting news and updates. Crude oil yesterday, based on EIA data, increased the fall almost 900 million barrels, which it was less than expected. Market was expecting for to see more fall for 1.23 million barrels, but it was decreasing by 910 million barrels. So it was a little bit kind of negative for oil market, which it means that which it was another reason to put the oil under pressure. For today, so far we had some data from Australia. That was not that much important. Export import shows that the Australian economy a little bit improving, a little bit better than expected. Trade balance is 11.22 billion, less than previous month of 12 point in October, less than previous month of 12.24 billion, but more than a little bit more than expected. Later today, we have to focus on, as you know, initial jobless claims in the United States. It will be the most important data to watch. And FOMC member Quarles will speak, Barkin will speak, and Bostic and Daly. So we have too many speeches today. And from ECB, Panetta will have a speech. These speeches will be important to see what are the central bank's outlook? What is the central bank's outlook on current situation? Yeah, the most important data are that. The Eurozone producer price index or producer inflation also will be another data to watch, but will not be that much powerful to change the market. That is what is going on for today. Initial jobless claim still will be, as I told, this will be the most important data to watch. But the data still for the same as yesterday and day before, still data. Even if for the stock market, as I mentioned in the last weeks, if we have the data that economy is improving still, so we have to go to the hawkish policies, as Mr. Powell also yesterday mentioned, to increase the level of tapering. If we have, so it will put the stock markets under pressure. If we have the news about the Omicron, so Omicron we'll put again Omicron, the worst case of Omicron will put again stock markets under pressure. So whatever happened, we can see that the stock market will be still under pressure. So SP 500, Dow Jones, and Nasdaq for the next days. This SP 500, this is Nasdaq, and this is Dow Jones. All of them still technically and fundamentally will be under pressure. On the cryptocurrency market, BTC is moving, improving. Yesterday, this is like coming back again to yesterday range above 57K, but still, as I mentioned earlier, also the general market is generally markets under pressure, and especially from there, if we see the bridge under 53K, the next target will be much lower than 53K. So 56K, sorry, 56K will be very important level to watch, which is in a 4 hour chart, which is 50 period moving average as well. If we cannot bridge the 56 and stay above, so to 800, and then 60K will be the next targets. But bridging under 56K will put the 53 and 48Ks in the spotlight. About the news, we don't have that much specific news to move the market. The general market is this, so still there is not specific news about the cryptocurrencies market. About the NFTs, they were a little bit under pressure. Some supermarkets in Europe, they started to accept the cryptocurrencies in general, not just the Bitcoin, in the cryptocurrencies, but still the market, as I told, doesn't have specific news to help the market. Ripple having just the news about the Ripple, it is started to have a good cooperation with some banks to increase their plan for the central bank digital currencies, CBDCs. This is the main market movers. Hope it was useful for you. Don't forget to leave the comment and write me what you want me to be covered in these videos, and if it was useful for you or not. See you guys again tomorrow morning. Bye bye.